Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 5 o'clock in New York on Tuesday, 14th day of November, 2023, and this is the daily report for gold and silver. Gold prices had a substantial gain today, with the value increasing by $16.30 or 0.84%. It is the percentage gain that we'll focus upon when we look at what happened to the dollar. Currently, we have December gold fixed at $1,966.50. I draw your attention to the daily standard candlestick chart that I've just put up on the screen. Yesterday, we identified a bullish harami, which is analogous to the Western Inside Trading Day. In yesterday's activity, we did see gold prices breach in terms of its low, the 50-day moving average, but open and close well above that. Today, the low came in precisely at the 50-day simple moving average, moving much higher on the day, trading to a high of approximately $1,976. The other thing that is noteworthy on a technical basis is that gold broke back above its 100-day moving average. I also believe that its current price of $1,966.50 is a key and critical price point that, if we see it break above, could easily signal further moves to the upside. I am basing that on this top that came in on the 20th day of September and the fact that the close today roughly matches that high. It would need to exceed and break above that high on a closing basis, and that would certainly change the dynamics of the technical indicators we are following to determine that a key reversal is in fact taking place from bearish to bullish. However, we must acknowledge that there is a large caveat to today's $16 gain in gold. We are looking at a chart of the Kitco Gold Index that was taken at 4:19 Eastern Standard Time, with gold fixed at $1,962.20, not that much lower than futures pricing in the December contract, as that is going to quickly move into expiration. When we look at the defined components, spot gold gained $16.40, but normal trading was actually bearish, taking an ounce of gold down $13.40, but absolutely not enough to keep it in the negative when we add the almost $30 from the decline in the dollar index. And we can certainly see the brutal action in the dollar index on this daily candlestick chart. This is today's move, a decline of 1.6%. The dollar declined by such a large amount due to the release of today's CPI, or Consumer Price Index report, which showed that inflation was flat month over month when compared to the prior month, and dollar weakness can be attributed to the fact that inflation remained the same as it was month over month, and inflation is not growing to a greater extent, which means that it is less likely that the Federal Reserve will enact more rate hikes rather than what they have recently done, which is pause any rate hikes. On a technical basis, we can absolutely say that today's decline caused major chart damage, breaking below not only this recent low that occurred on the 6th of November, but breaking below the top that occurred in May right here. That being said, we could expect to see a continuation of dollar weakness. If dollar weakness is combined with buying rather than selling into gold, that would ignite a rather strong rally. Silver had an exceedingly strong gain today after hitting these lows yesterday, corresponding to the 23.6% fib retracement below $22 per ounce. We saw silver open above yesterday's close, break through the 38% retracement, and find resistance at the 50% retracement, which occurs at $23.14. I believe that in terms of key levels of resistance, the first level we want to watch is where these tops come in, and I'm looking at the real bodies rather than the wicks, and that occurs at approximately $23.50. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.